So guys, we have an extremely spicy panel lined up for you now. This is one I've personally been looking forward to despite forgetting that it was happening right now. This is a panel about exchange control regulations. For the foreigners here who are used to free flows of capital, this might sound like a strange concept, but in South Africa we have a thing called exchange controls where the Reserve Bank limits the money you can take offshore. Carel will tell you a bit more about this, but it's actually illegal to travel abroad with more than 600 rands worth of clothing on you. This law was made when, in the 50s? 1961. So this is what we're dealing with here, guys. So here we have Carel and Leon and Almo and other Carel to speak to us about exchange controls in this panel.
Cool. Hi everyone, I'm Carel van Wyk. I will be the panelist. You guys can join me on the stage. I'll be the panelist for this, the moderator for this panel. And I know what you're thinking. We're talking about regulations and exchange controls. These are boring things to talk about. Typically, when there's a panel like this, there's some lawyers and people from compliance department speaking, and you kind of fall asleep. If you think you should maybe get up and go outside for a break, this is, I think you should reconsider, because this panel is going to be the opposite of that. This panel is going to be on fire, because we're joined here by three heavy hitters from the Bitcoin and crypto industry in South Africa. They're all working at the coal face of Bitcoin services in South Africa, and they've got a lot to say about, firstly, where does our regulations come from in South Africa? Does it come from people that we've elected and picked to make and implement the rules for ourselves? Or does it come from somewhere else? We can talk about that. Does it come from abroad, perhaps? Then we will talk about how regulations impact the businesses that these guys work for. And finally, we'll maybe end off just talking about what does the future of regulation look like in South Africa, and where might things go. So, on that note, let me introduce our three panelists. So I've made a couple of notes. First and foremost, Mr. Almo Lubowski. Almo has been working in the financial services industry for many years. For how many years, Almo?
Since 2009.
2009. Okay, so it's been a very long time. Almo is a legal guy. He holds a degree in law. And something interesting about Almo is that he hosts a Bitcoin podcast. Or a podcast. What's the title of the podcast again?
Business Bucks and Beach Bets.
Yeah, and it's well worth a watch. It's very entertaining. Another interesting fact about Almo is born in Namibia, and he is a founding member of INVES Capital, a crypto service provider. And then one more important thing about Almo, he says that he works to promote individual economic prosperity in Southern Africa as a means of advancing social justice. And then moving on to Mr. Carel De Villiers on his right. Carel is the founder and CEO of Shiftly. Shiftly is a leading Bitcoin arbitrage service provider in South Africa. Who knows what does arbitrage mean? Okay, I see some people that's not raising hands, so just to explain what arbitrage is. Due to South Africa's exchange controls, it means there's limits in the amount of money that we can move in and out of the country. And the effect of that on the local Bitcoin market is that Bitcoin in South Africa is a little bit more expensive than it is in an international foreign market. And the reason for that is the supply of Bitcoin in South Africa is limited. So even if the demand is the same, the supply is less, that means the price is a bit higher. And that's the reason why Mr. De Villiers has a very successful business, because of this, and he'll speak about this. So Carel discovered Bitcoin in 2013. He's a passionate advocate for Bitcoin as the best form of money. Under his leadership, Shiftly has become the largest supplier of Bitcoin to South African exchanges and the South African market, consistently providing liquidity, driving growth in the local market for the past 5 years. And then last but not least, Mr. Leon Kowalski, who I think single-handedly built one of the best Bitcoin exchanges in South Africa. Leon is the founder and CEO of Cape Crypto, a proudly South African exchange launched in 2020. With over 15 years of experience in software engineering and product management, Leon's journey with Bitcoin began in 2012, fueling his vision for freedom by liberating South Africans from financial tyranny. So I think you can already see where this panel is going. After honing his skills in product management at various startups across the world, most recently in Sydney, and later at globalist sellout Luno in Cape Town, Luno founded Cape Crypto to simplify Bitcoin access for every South African. Cape Crypto is an SA exchange that has a Bitcoin-only mode, and it's also the only exchange in South Africa that has support for Bitcoin Lightning. Sorry? Yes. Okay. Thank you. I'm just reading what they gave me. So I don't want to spend all the time talking on this panel. We've got about 40 minutes. I'll hand over to Almo, and I'll set him up with the initial question. So Almo, can you give us a quick overview of the regulatory landscape of SA, the regulators, where the regulations come from, so we just have a basic understanding without getting too technical?
Yeah, it's a bit difficult, obviously, not to get too technical, and I think most people here aren't necessarily from businesses, but some are. But I think it's a good idea to understand sort of where we sit in the regulatory landscape in South Africa. So we've got a couple of I think the main ones we need to think about are the FSCA, that's the Financial Sector Conduct Authority. That's also where most normal investment companies that are selling investment products to the consumer are registered. They're called FSPs, Financial Service Providers. Most recently, so if we talk about, unfortunately, the regulators only talk about crypto, and businesses operating in the space are called crypto asset service providers, so in short, CASPs. So that's one of the acronyms that might be flung around. So the FSCA is a conduct regulator. So what it basically means is that they want to regulate what people that have businesses kind of promoting investments or anything that's a financial product, and we can go into that a little bit. They've defined crypto asset as a financial product, just like any other investment, so to speak. And they try and regulate that people don't go out and scam people. And I think that is important. We know that there's been a lot of scams around Bitcoin, around crypto, and I think that does need to have some control over it. What I will say outright is that Bitcoin can't be regulated. I mean, that's I think, a given. Bitcoin as it stands, what it represents, can never be regulated. What can maybe be regulated, as I said, is the conduct around how you deal with it. And that's why I think peer-to-peer and communities dealing in Bitcoin becomes very important, rather than maybe necessarily, although there are businesses that operate in the space that also need to be able to operate safely and give consumers an opportunity to adopt, because I think it does start at that level. We then also have the Financial Intelligence Center. So what they are responsible for is sort of financial crimes, especially anti-money laundering and terrorist financing, which has become a big thing in the world. And then you've got the South African Reserve Bank, and I think this panel is a lot about the exchange controls, and that's the Reserve Bank controlling the prudential flow of money, at a higher level, and exchange controls. The other organization, which is quite interesting, and the reason why we mention it is because they're an intergovernmental voluntary association of countries called the FATF, the Financial Action Task Force, created in about 1989. So they've been around for a long time, initiated by the G7, and in the meantime have a lot of countries that have voluntarily, in some respect, joined them. And why that's important is because the anti-money laundering initiatives around the world and terrorist financing initiatives to stop the illicit movement of money, the FATF has driven local regulators like the FSCA that I mentioned and the FIC, as well as the SARB, to take initiative in regulating crypto asset service provider and crypto as much as they can to aid in curbing money laundering and illicit movement of money.
Okay. Thanks, Almo. So I mean, a couple of things. Firstly, the regulations and the regulators exist to protect people. There's a lot of scams. There's a lot of things to protect people from. And then it sounds like they don't really see Bitcoin as a form of money. It's like they're regulating it as a financial instrument. That's something you spoke of. And then you mentioned the local regulators as well as this international entity that's advising the local regulators. But so this is all, thanks for the background, this is all very theoretical. So now let's dig into a little bit And can you tell us a little bit more about, I mean, you deal with this stuff daily, right? So you see the things as it develops, as it comes out. Can you talk a little bit about the recent changes in regulation and how that impacts the industry?
Yeah, I mean, I actually contributed to an academic publication looking at the roadmap of where all of this started, especially in South Africa. Now, in 2014, the South African Reserve Bank brought out a paper called they call it virtual currencies, and they've been trying to look at, and a lot of consultation papers have been brought out, and they dragged their feet for, I would say, about almost 10 years in terms of bringing out anything with regards to regulating sort of crypto or Bitcoin in any form. It was on their radar, they talked about it, but they didn't really do much about it. And then, as I said, when the FATF came and said they're going to grey list, and I didn't mention grey listing, some of you may have heard it in the news, but it's sort of the grey listing of South Africa, saying that they didn't have enough measures in place locally from regulation to curb money laundering, terrorist financing, and proliferation financing. So when the FATF grey listed us, these regulators essentially moved extremely fast in terms of how they're going to do something to show that they are regulating crypto in some or other form. And I think what that caused is potentially unintended consequences. The Financial Services Conduct Authority said that they are classifying this under existing legislation, which is an act called the FASE Act, the Financial Advisory Intermediary Services Act, which, as I said, regulates anyone providing advice or intermediating products, normal financial products. And they kind of fitted crypto and Bitcoin into this and called it a financial product, which has potential unintended consequences, and pretty much only looks at it as an asset and didn't look at it as a medium of exchange. And I think that's where Carel may even be able to give you some at some point with his business and what they've run into, is because actually more so than anything else, and I think many people in this room, it's about a medium of exchange more than anything else. But yeah, they decided to classify it as a financial product, brought out a declaration saying that every business, and I think this affects businesses on a day-to-day basis more so than anything else, said you need to register with us and get a license to do so. The Financial Intelligence Center said you are basically called all crypto service providers an accountable institution and made them as responsible as banks, insurance companies, investment companies, to make sure that they do know your client and anti-money laundering, sort of get information from the clients that they take on. I hope that answers the question a bit.
So can you name like one, just in one or two sentences, one impact or like one effect that changes regulations had recently that you can refer to?
Well, I think the main thing for businesses and for driving adoption is the barrier to entry to start any kind of business in this space. I mean, it means that, and that's been a problem even before we look at crypto asset service providers, as I said, they're called. I'm using the terms that the regulators are using. But it's caused that even before, if you want to start getting involved in advising people and helping them from a financial perspective, that you have to get this license. And they've made the barrier to entry for businesses extremely high and excluded a lot of people.
Okay, so that might have an impact on startups in a very young industry, and it might be bad for us in the long run. So I want to give some talk time to Mr. De Villiers as well, Carel. So I made a comment earlier that we've got capital controls, and as part of that, there's a premium on the price of Bitcoin, which creates a market for arbitrage. And you, I think you're the CEO of the largest arbitrage company in South Africa, or one of the largest. You can correct me if I'm wrong. So maybe you can just briefly, don't go into technical details too much, briefly say what does capital controls means, what can people do, what can they not do?
Thanks, Carel. Is my mic on? Yeah. Thanks, Carel. So, yeah, definitely one of the largest. I think the largest Bitcoin. one of the largest Bitcoin-specific arbitrage service providers. And yeah, South Africa has had exchange controls since 1961, long before the advent of the internet. They were instituted by the previous apartheid regime to prevent capital flight. Obviously, we were under severe sanctions at the time, and I think any sane person or investor would have wanted to send all of their money out of the country back then. So these measures were put in place to try and prevent that from happening. Fast forward a number of years to 2014, as Almo mentioned. It was the first time that Bitcoin came over the radar of the South African Reserve Bank, and they published a short, I believe it was 2 or 3 pages, paper on it, and they actually cited the exchange control risk back then, so more than 10 years ago now. It's essentially caused a fascinating scenario in the local market where our current exchange controls prohibit companies and trusts from sending money abroad for arbitrary purposes like purchasing Bitcoin and other crypto assets, for example. It's only individuals that are permitted to send money out, and they've got 2 allowances that total 11 million rand per calendar year. And so they may avail of these to convert their rands into dollars, send their dollars to a foreign exchange and buy Bitcoin with that dollars. And then they can actually import effectively the Bitcoin that they've bought to South Africa, and they can sell that Bitcoin at a higher price. And the reason for this price discrepancy is because we've effectively got a cap on the supply. It's only South African residents that may purchase these assets abroad, and on the local market, there's no cap on demand. So, as I mentioned earlier, companies and trusts are not allowed to send money abroad to buy Bitcoin. In the local market, they may buy as much as they want. So we have this disconnect between supply and demand. Supply is capped, demand is uncapped, and therefore, historically, we've seen a premium on the price of Bitcoin and other cryptocurrencies. For interest's sake, this premium in 2017 went as high as close to 30%. So you can just imagine if you could send funds abroad and buy Bitcoin and resell it in the South African market, you could have made quite a nice profit on that. So that's in essence why Bitcoin trades at a premium, and it's been like that since the very first exchange existed in South Africa. So it's actually always existed. These margins have squeezed quite a lot. Gross margins at the moment are sort of between 2% and 3%, and they've gone as low as 0 and also negative at times. So we've seen that it's during severe volatility, there were brief moments where it was cheaper to purchase Bitcoin in South Africa than overseas. And then perhaps just something to mention as well, it's actually the mechanism of arbitrage. So people exploiting this difference is actually what keeps prices in check between different countries. And in South Africa, demand and supply disparity, we see this constant premium, or mostly positive premium in South Africa.
So it sounds like you're saying that the SARB, the Bitcoin crossed the radar in 2014. This is a relatively new thing, and as we know, it's difficult to control the way that people use Bitcoin, and potentially people might be using Bitcoin to circumvent these exchange controls. So is that something that is happening, firstly? And then secondly, considering that it's kind of a new phenomenon for the Reserve Bank, do you think that the rules as they apply today will continue to apply, or do you think they will at some point revisit their stance?
That's a good question. I think that's also been the pivotal question of our long-term sustainability of our business. If naturally, if this gets shut down, then effectively the service that we offer to South African individuals, which is essentially making it easy to benefit from this opportunity, will also fall away. We've been saying ever since we've launched in 2018 or early 2019 that we've got about 2 years left before the SARB closes this loophole, and I think there's been a big element of just from their side, turning a blind eye and letting this happen. They're very well aware of individuals that are, and companies and perhaps trusts that are purchasing Bitcoin and other crypto assets in South Africa and using that as a mechanism to externalize value, which is a criminal offense, quote unquote, the Exchange Control Act. But it's not enforced. There's been very few cases where it's been enforced. Very difficult to enforce from their side. We all know it's a permissionless network, so as soon as you've purchased this and moved it somewhere, it's fully within your control, unlike the South African rand, which cannot move across borders freely. So, yeah, to get back to your question, Carel, I do see things changing. There's been a lot of small changes along the line. We've seen exchange controls not relaxing but tightening, even though they will tell you that it's relaxing, and we're moving towards a regime of financial surveillance, which is what they like to call it. However, we've seen interesting things. We've seen them stop credit card payments to offshore exchanges, so you may no longer whatsoever purchase Bitcoin on a foreign platform. That's where there's conversion into a foreign currency involved. You used to be able to do that up to the value of 50,000 Rand per transaction only, and also within your set annual limits, as I explained earlier. So that's fallen away. Something else we've seen that's interesting, and not specific to Bitcoin, but the Common Monetary Area, so that's South Africa, Namibia, Lesotho, and Eswatini. All their fiat currencies are pegged one-to-one with the Rand. And you essentially used to be able to just do an EFT like you would to another local South African bank account, and the currency would credit in the foreign country as a one-to-one, call it stable coin. So Namibia runs the Namibian dollar, but it's one-to-one with the Rand, and their central bank follow, and all the other CMA countries' central banks follow a similar exchange control regime in order to prevent capital flight as well. So we've seen them clamp down on that. All those transactions are now foreign exchange transactions. So definitely, I think that's more originates more from the FATF and the recommendations that they've given to clamp down on cross-border money flow. But it's also a clear indication of capital controls becoming stricter. We've seen the amount of the allowances. So I mentioned earlier, you can send 11 million Rand abroad. So that consists of a 1 million Rand single discretionary allowance. It used to be called the travel allowance. So when you go overseas, then any purchases you do, or if you buy stuff from overseas, would count towards that 1 million. That amount used to be vastly less in the past. I believe it was 200,000 Rand at one point. And I don't even think you can buy.
When was this 1 million Rand instated in? Or when was it made 1 million Rand from 200?
I believe it was in 2011, if I'm not mistaken, around there.
Okay, so about 14 years ago?
Yeah, around 14 years ago. And to touch on the other allowance, the 10 million Rand one, around that time used to be 4 million Rand, and that's known as the foreign investment allowance. And they just put a little cherry on the cake. They make you apply through SARS to get permission to this, to make sure that you're tax compliant, because they don't want untaxed money leaving their country. I think I don't know if everyone knows, but SARS essentially has the right to just debit funds from your bank account if you are not tax compliant. So they lose the ability to do that if you send your untaxed money offshore. So that mechanism they introduced, the SARB actually delegated that mechanism to SARS.
Okay. It sounds like there's definitely some changes coming down the pipeline that we should consider, and that will have some major impacts on the local industry, and especially on your business. You also mentioned the FATF again, Common Monetary Area, new restrictions around moving money. So it does sound like we're not relaxing rules, we're definitely tightening, and it's impacting businesses today. So let's explore that topic of businesses being impacted by new laws and regulations as tightening. So I know that there's been some recent new regulations implemented by the FIC, the Financial Intelligence Center, that comes from the FATF being this unelected group of bureaucrats somewhere in Europe. And this directive, I think it's Directive 9, is called the travel rule. So Leon, I think maybe, can you tell us a little bit more about the travel rule? What is the travel rule? And what is the implications of a travel rule? I know that's something you've had to deal with quite a lot recently.
Yeah, absolutely. Thanks, Carel. Yeah, the travel rule is essentially, like Carel says, it's a recommendation, as they poetically call it, that has been passed down from the FATF, this unelected group of bureaucrats, to essentially move our KYC information around the world and make it readily available to any industry that wants to look at it, any law enforcement agency, any government. How that looks is that when you want to send from South Africa to Kraken, from Luno, Cape Crypto, you want to send some Bitcoin to Kraken or any other exchange, we're now going to have to send your KYC information along with it. That means your name, your ID number, your physical address, a couple of other things. And likewise, when receiving crypto, so if you want to send Bitcoin from Kraken to Cape Crypto or to Luno, we're going to have to receive that KYC information, store it, and potentially verify it. I don't have to tell everyone in this room how draconian that really is. It's essentially removing privacy completely and making it a regulation to remove privacy. So we're very unhappy about that. And it's difficult to push back on this because the FATF, there's some mystical group up in the clouds, and if we want to push back against our regulator, they have to push back against the FATF. And because we're in a state of grey listing, like Almo related to referenced, they're not going to do that. So South African regulators essentially toe the line with whatever FATF wants us to do so that we can get out of the grey listing. And unfortunately, that means that customers, all of us, individuals, have to bear the brunt of that. It's very difficult. And of course, when that comes out and we have to enforce that, it's coming into effect at the end of March this year, everyone's going to be unhappy. And it's not that we want to do it, it's not that exchanges want to do that, but we have to do it. It's a bit of an issue.
So it sounds like this is going to have major impact on the players in the industry. Was the industry players ever consulted on these changes?
Yeah. I mean, you're using that word consultation lightly. You're playing quite fast with it, but we were consulted, and I think all of us in this panel here, we're actually a member of the Crypto Asset Association of South Africa. So we're the de facto body that is aiming to represent all the crypto players in South Africa, Arbitrage, other businesses, crypto exchanges. And the FSCA did reach out to us, the FIC, and we have spoken to a few of the regulators directly. And as the body of CASA, the Crypto Asset Association of South Africa, we put back a formal response to the regulator, voicing our concerns and very specifically addressing certain issues, specific issues that we have with the implementation of this. And the response was humorous, to say the least. At best, it demonstrated incompetence by the regulator. At worst, it demonstrated a sheer ignorance or a sheer discounting of our opinions, it's very unfortunate. I'll give you an example. So the FATF recommends that the minimum threshold for collecting and verifying this information, this KYC information, per transaction is $1,000 or 1,000 euros. So if you send a transaction that's greater than 1,000 euros, the receiving CASP has to verify that information, collect it, and potentially report on it to their local regulator. That's their recommendation, and most of the exchanges in Europe have implemented that. Switzerland has not. They've ignored that. They've done a zero threshold, so they will collect and report on every transaction. And so South Africa followed suit, and essentially we have a zero threshold. So any size transaction, we have to collect this information. Now, the regulator did put in a small provision, and they said 5,000 Rand. So under 5,000 Rand, we can collect limited information. Not the full KYC, but limited, which is essentially, I think, your name, the name of the beneficiary, and your wallet account details. Something to that effect. And yeah, essentially, we pushed back and we said, look, can't we make it $1,000? Can't we make it just the standard and say, let's follow their recommendations? Because below that threshold, it becomes so difficult to implement. And the regulator just said, no, you've confused this 5,000 Rand number with a single transaction, and so you were wrong. And we were right. They were wrong. So they either demonstrated ignorance or just didn't want to address our issue directly. And this has been the whole experience with the regulator. Unfortunately, sometimes it's very positive. You know, it's good to have some regulations. Potentially, we do want to protect people's money. You don't want crazy people coming in and starting businesses and scamming people and then running away, as we've seen. So a little bit of regulation can't be bad. But too much regulation is an issue, and there's way too much overreach at this point.
And it sounds like it's being deployed quite rapidly. Consultations asked from the industry, it's not necessarily always considered. And then in the cases where it is implemented, it sounds like it unfairly affects local players versus international players. And we're already at a disadvantage because our markets are smaller. So maybe, I know we don't have a lot of time, but maybe, Carel, if I can ask you for sort of a final thought, assuming our regulations will essentially reduce competitiveness of the local market, and some of the comments that you made around potential changes in exchange controls, what do you think will be the long-term impact on the local Bitcoin market in South Africa, given everything that we've heard today?
Yeah, that's a good question. So, as Leon mentioned, the regulators do reach out for industry, quote-unquote, consultation. We've recently seen that the South African Reserve Bank has reached out with a whole bunch of questions specific to exchange controls and how they essentially want to incorporate Bitcoin and other crypto assets into the existing exchange control framework. And from the questions, you can infer quite a lot about where this is headed. So just to touch on a few of those, essentially they will make purchasing Bitcoin as part of your foreign capital allowances. So you will only be limited to buying 11 million rands worth. You'll only be limited to sending 11 million rands worth of crypto or Bitcoin out of South Africa per calendar year. Now, while that may sound like a massive limit, I think the general person doesn't have access to that much money. The effect that has is it effectively puts a cap on the demand in South Africa, because companies and trusts will not be able to buy Bitcoin and self-custody it. They will be forced to keep it on platform, on exchange, which probably isn't the worst for businesses like Cape Crypto. However, the individual at the end of the day will be limited in their own capacity. This will also have an interesting effect. So we're currently seeing this cap on supply but no cap on demand, and essentially what they're doing is they are putting a cap on the demand and no cap on the supply, because they will be permitting the exchanges to source liquidity overseas, which is something they have not done to date. Another few interesting things are that you'll be able to send your Bitcoin between local crypto asset service providers, such as the local exchanges. However, as soon as you want to send it abroad, then the exchange will have to report, similar to a bank, to the South African Reserve Bank, whether this is going under your single discretionary allowance or in the event that it's under your foreign investment allowance. You would have to provide them with a SARS tax clearance PIN. So I'm very curious to see how the exchanges are going to implement that. It's a laborious process that has to be checked on the SARS e-filing website, which quite often is down and there's no APIs for that. So quite looking forward to how they are going to be handling that. I think it's going to be very detrimental to the local market. As soon as I think everyone knows, as soon as you introduce artificial floors and ceilings, that you basically destroy the market. So I'm very curious to see how that's going to play out. The regulator is not, I don't think they are anti-Bitcoin or anti-crypto whatsoever. I just think they are aiming to give everyone access to exposure of the asset, but they do not want to give people access to the permissionless nature of the asset. And that's where they recognize the biggest threat to the existing financial system, because the last thing they want is a parallel system being created, which is what's busy happening, and it cannot be regulated, it cannot be stopped. Centralized exchanges are key for adoption initially, but then thereafter, your P2P trading, as Almo mentioned, takes off, and decentralized exchanges, etc. So yeah, they are really trying to batten down the hatches, but we'll see who wins in the end, I guess.
Thanks, Carel. Yeah, I'm handing over to you for the closing thoughts. As a veteran in this industry, where do you think things are going? And do you think there's light at the end of the tunnel, or is it pretty grim and dark?
I don't think it's grim and dark, but I think we need to remember. So, I mean, I come from two perspectives. I understand the regulation, and I advise. Well, I'm a compliance head in our company, but we need to remember that laws aren't always correct. If we look at, I mean, I look at my own history and my own father having laid down his life for fighting the apartheid regime, and that. We need to, I mean, it's not as drastic as that, but we need to remember that regulation isn't always right. And regulators are trying to do something to protect consumers, but consumers are the ones that are affected somewhat in the end. You are affected in terms of how you want to go about doing things on an everyday basis. I watched the Unbankable movie yesterday. I don't know if any of you watched that. And I mean, there's, for instance, groups of ladies in Canada that are trying to provide something for their community and are essentially, one of the biggest barriers they're finding is that they're actually operating illegally in some respect. And I think that's what we're finding ourselves in. So I think from an everyday person perspective, understand there is this regulation and that you might find yourself wanting to do something that you're passionate about in this space, in this Bitcoin space, and maybe hampered doing so by regulation. That is essentially trying to protect you, but who knows if it's good for you or not, you know? And I think that's what you need to remember. So I think that's one of the closing remarks that I want to make. Law is good, but the thing is, one of the first principles I learned studying law was that you only put in place regulation when you can't self-regulate, right? And I think we haven't even been given the chance to even start self-regulating. And I think the crypto industry and Bitcoin itself, I think, has been known to actually regulate quite well before we had any regulation. And we weren't even given a chance to actually self-regulate and see how we find our own feet in this. And now we've had regulators pushed by international voluntary bodies sitting in Paris, by the way, not in the cloud, but that are telling our regulators what to do so that we can become part of a global community. So, you know, it's give and take. There's good and bad, but I think ultimately the people will have to talk.
The people will have to talk. I'd like to thank our phenomenal panel here today. Thank you for sharing your time and expertise and thoughts. Thank you for speaking honestly and candidly. Can we please give them a round of applause? Thank you.